Robert,
Indeed. Hi.
hi. How's your Black Friday shopping going?
Well, I'm doing it all online. If I don't get it for half price, I'm not even interested.
Well, you know what? Well, you know what you can't get online, but you might get for half price?
What?
Real estate.
Half
Houses.
price? How can that be? Compared to what?
Well, maybe not quite half price, but also not online on this episode of Real Estate Chat with
Jonder Perez.
and Robert Eid. We're going to be talking about a report that has come out that might see Canadian home prices drop a further 10%. Now, for those of you following Real Estate Chat and who have liked and subscribed, you'll know that from peak, courtesy of Robert's chart, we're down about 16, 17%. We're going to explore that later. But a Canada-wide 10% drop would bring us, 27%-ish? Like, I mean, if we are just adding it off peak, but being Canada-wide, being average, being all sorts of different things, will this report give as much of a discount as Black Friday sales? We're going to find out. Robert, let's have a look at this report first of all.
Sure.
So you all know where we're coming from. So this is a TD Economics. It's not I guess it's not an actual report, you might say, but it's a Q&A. Questions we've got answers addressing issues impacting the economic and financial outlook. It's Friday. Give me a break. November 22, 2023. So this was 2 days ago. Jump to question number 7. And question number 7 says, is Canada headed for an even bigger housing pricing corrections? 2 question marks. I didn't know they could do that. They're allowed to do that kind of stuff. Seems very casual to me. But what they say is in September, a forecast called for Canadian average home prices to fall around 5% from their third quarter level through the early part of next year. Now, we've had to magnify that drop to around 10%. That's huge. That's a doubling of a forecast for a drop in prices. And there are 2 main culprits underpinning this change. First is of the upgraded bond yield forecast. The second is the larger than anticipated loosening in BC's and Ontario's housing markets. Ontario's sales to new listings ratio, we talked about this in the past for the Toronto Regional Real Estate Board stats, plunged to 39% in October from 63% in May. Here's the chart. A sudden surge in supply is largely behind the deterioration in the ratio. We will link to this so you can follow your own Q&A. And then we're going to be talking about Robert's charts momentarily. But Robert, any initial thoughts on that? I mean, doesn't that get you and Real Estate Chat viewers excited to go Black Friday real estate shopping?
No. But if it does, then it's clickbait. And that's what most of these things are. Get you in the store and buy something else at full price. Anyway, it doesn't matter. The TD Economics is entitled to change their mind. Now, if they're 100% wrong 1 month later, then I don't think that does much for their credibility. So if they said it was 5% for their third quarter report, now they're saying that they're projecting that out to the end of the first quarter. So now they're saying, and we're just barely into the fourth quarter, that 5% will be 10%. So they're completely off base. And if we look at their reasoning, the bond rally, which is now finished, it's all time. And the sales to new listing ratio that they're citing as the key reason for changing is supply demand. We've debunked so many times that these fellas sitting in their ivory tower cannot seem to get through their stinking thick heads that the Toronto Real Estate Board is padding the numbers. Now, maybe there's other boards that are doing the same thing too. I sent the last months off to, like, after the 15th when CREA put out their stats, I said, do you know that everybody's picking up what you put out? And do you pick up what Toronto puts out directly? And do you know they're padding the numbers? Does anybody else do that? So he says, the economists are away, so I'll have to check on that. But maybe we've got somebody to listen to what we said about sales to listing ratio cannot be used. All you can do is months of inventory, because those are 2 immutable facts. The number of sales and the number of listings, snapshot at the end of the month. So is it Black Friday? No, it's clickbait.
Oh, okay. So let's look at real headlines or real stats, real data, because comparing Canada average home prices to TREB is not going to be an easy, add 10% or reduce 10% by our numbers and we'll see. But Robert, according to your latest update of your charts from November 2023, we're at 83.7 4% of Feb 2022 peak, which brings us to
In
16.
fairness, this is me saying that we're going to see .75 price down in November from October. Okay, .75, 99.25% is where we were. So a tiny bit. It always goes down in this time anyway. So, and then all those others are using that same 117, 484 as a percentage of the maximum that November's ever been. It's still the second best November. And it's almost 4% above November last year. We are down 16% from the peak of a boom with 2% interest. And we're up 7%, 8% nearly from January of this year, and down a tiny tad from October, which is entirely normal. So what do we say about next year? Well, we've talked about this many, many times. What do we think next year? And we use Mr. Robert Hogue's example of putting everything from the past booms at 100 and pegging them all together and see whether charts running out. He did it quarterly for 9 quarters or something or other. I did it monthly for 27 months before and after. And the only one that, here we go here, if there's a blue in the middle, 3 of the 4 prior peaks, the models had returned to exceed 90% of the peak by 24 months. The exception was 1989 through 96, which is what we're saying is where we are now. This long green with orange dots on it line is what we're saying happened in the early 90s. And we're saying that that is the closest model. And if we look at the economic conditions that accompanied that, the peak was a run up in the late 80s, speculative, in everybody buying a house. Now that was different then. It was going from 105,000 to 205,000 in a very short period of time. But it's the same kind of thing. Interest rates were being used by the central powers to fight inflation, and employment and everything else be damned, because that was their number one objective. Now, we look at it another way and we say, okay, here's the history that we've had coming from sometime in 2015. It goes up and down. We can see a couple of peaks, then we have government intervention, knocks it down. A peak, up and down, up and down. And there's a lockdowns, knock it down, way up to 113. And there we are in February 22. And then the rates kick in and falls way down. And then we have a rally based on the pause and the perception of the people who think they're too smart to get suckered into a suckers rally, And there was no pause. There was no decline. So now we're trying to find out. So we project into the future of, what if we go down 0.75 a month, 1% a month, 1.25% a month, 1.5% a month for the full year of 2024. And we've said that February 22 to October 23, that period of time, is an average of minus 0.78. So somewhere in between there, we're not too far off on between the first and the second of what next year might be. So if we go at 0.75, we see that at the end of next year, the average price could be 1.013, which is 24% off the peak. And we're not right now off by 16% off the peak. So it's not the end of the world, but it's not up. It's definitely down. And if it's 1% a month, which would be for the whole of next year, plus December of this year, we'd be down to an average of 978 or 26% off the peak. Now, if we go back to our other chart, which says where are we supposed to be after 2 years, we see that we're going to be somewhere between 70 and 80% of the peak, which guess what? It all lines up. So are we going to be fortunate enough to be lucky that we pick some 4 different things and they all add up to the same thing and they're all right? Maybe, but who knows what they're going to do. Our friend Tiff, all of a sudden he's got political. And he's saying, if you heard Mr. Toronto Real Estate Board had a meeting yesterday, Thursday, and Benjamin Tall quite rightly mentioned that Mr. Macklem saying, well, maybe there's no more rates. I don't know whether I believe him, but or Benjamin saying that he didn't know whether to believe him, but that Mr. Macklem is now talking as if he was a politician rather than talking as if he was a dispassionate inflation-killing monster. So we got to watch. We got to listen very carefully. We just had a budget which was full of hogwash over what's going to happen in the future beautifully. And that slide that you just pulled up, let's look at that again. Because how we deal with everything is according to these 1, 2, 3, 4, 5 categories. Each person who wants to buy or sell falls into one of those categories. But before we can deal with any of those types of buyers or sellers, we have to think of the scenarios. Each one of those people, every one of the customers that we encounter before they become a client, we have to say, okay, what do you think is going to happen in the future? Is it going to be the best case where prices slide to 75% of the peak? Oh my, well, that's a little bit less than now. Yes, it's a little bit worse than now. Rates settle at 4 to 4.5% for a 5-year first. Or is it going to be the worst case? Prices slide to 50% of the peak. Oh, no, that's terrible. I don't want that. Prices, because things are so terrible, rates fall to 3.5, 4.5 for a 5-year first. So that part's better, but the prices are worse. And then the muddle middle, where prices slide to somewhere 65 to 75% of the peak and rates settle at 5.5, 6%. So which one of those is going to be right? Which one? Because you are the one that's got to feel confident about what the future scenario is going to be. And then based on that, you can make a decision of what's smart to do. Is it smart to move, not move, buy, not buy, liquidate, consolidate, based on what you think the future is going to be? You absorb all these elements, all these experts, all these opinions, and you say what you think it's going to be. From there, once we know what you think, we know what you got, what you want to do, we say it's possible, or it's impossible, or it's possible if you're really darn lucky.
So, I mean, with this, as you called it earlier, I mean, it is clickbait because anybody can pretty much piggyback off of that. But what's the implications for our real estate chat viewers if they're in the market? I mean, you've explained the different categories now. Why these constant guesses of where the price will go? I mean, our comments are not short of that either. There's some saying, "Oh, home price will drop another 50%." Nobody will ever get it right. I mean, well, somebody will. It's like a lottery, but
okay. Here's the summary. Anybody from a bank, no matter whether they're a real estate specialist, what their job is to get you to not invest your secondary money. Like if you already own your own, fine. But if you're going to buy an investment property, they don't want you to buy an investment property. They want you to give it to the guys that advertise in their newspaper, which are from financial institutions, investors. So that's what the sleight of hand is behind TD Economics reports, Royal Bank reports. That's what they want to accomplish. The Financial Post, the Globe and Mail are all heavily supported by advertisers of financial institutions, not mom and pop and everybody who wants to sell their house. So they have an agenda and they're telling you something that suits their agenda, not what suits you. What I'm trying to do and what we're trying to do on Real Estate Chat is say, this is how you analyze it. You analyze it. If we agree, then let's work together and make some money for you and for us.
there you go. So real estate chat viewers, let us know what you think about these. I know there's not going to be any shortage of comments or guesses about this report and about where prices are going. But more importantly, again, we've repeated this many times in past episodes, do the right thing for you, work your budget, speak with a mortgage broker who's going to help you advise you in terms of affordability, speak with real estate brokers who understand the market and will challenge the way your thinking is in terms of the perception based on what you hear from the media, what you hear on TikTok and Instagram and other places, so that you can make factual, informed, educated decisions. Thanks for watching this episode of Real Estate Chat. Stay tuned for more. Spend responsibly. Don't spend all your money on Black Friday deals. Real estate deals, maybe. Take care and bye for now.
Okay. Happy days. Bye for now.